Welcome to a quick Bitcoin analysis. I understand this is something many viewers are interested in. We'll start by creating some noise on the 3-month time frame to understand the underlying structure of the blocks, the movement, and the proportions. You have to understand that higher time frames provide power in price action, while lower time frames provide precision in price action. That's why we progressively narrow down the price ranges when starting from the higher time frames, and then identify lower time frame blocks within them. Basically, my goal is to refine the structure across the 3-month, 1-month, and 1-week time frames. From there, we can build the structural foundation for a setup on the lower time frames. As you can already see, Bitcoin has crossed above the 3-month block. That indicates strength. But we must not forget that the breakout is not confirmed yet, because the 3-month candle has not closed above the block. There is still another month before the candle closes. Until then, this could still be considered a spring stretched above the block, with another month to pull the price back before the close. Even on the 3-month time frame, we can already begin building a set of possible scenarios. Time will tell which of them becomes more probable and which becomes less probable. As we progressively narrow down the price ranges, we can refine the probabilities and achieve greater precision. As you can see, the 3-month liquidity has been taken, which is a positive sign. But we need to remember that liquidity and rigidity are dynamic elements. They move, strengthen, weaken, appear out of nowhere, and even what has been taken creates something new in the process. Think of it as a self-feeding loop. Okay. I'm clearing the 3-month time frame and moving down to the 1-month and 1-week time frames. This is where we start to create some noise. I'm marking all the 1-month blocks, and the goal is to locate the 1-week blocks within the overlapping price ranges. Essentially, what we're doing is quantifying price action into centers of force, areas of rigidity where current liquidity can converge and contract. Think of these areas of rigidity as springs of liquidity, compressed zones of potential energy that only need to be breached for that energy to be released. The overlapping zones and price ranges are where I will look for the weekly blocks. Notice that once I find them, their boundaries align perfectly with the boundaries of the monthly and 3-month blocks. These weekly blocks are very strong because their overlapping price range is also the same price range contained within the larger, more massive blocks, the ones that contain more price action. I mark these blocks with a kind of power metal so that as I move down through the time frames, I can keep track of the strength of each price range I identify. In the end, I am left with 3 1-week price ranges. This becomes my framework before I move down to lower resolution time frames, such as the daily and 4-hour. Now, we mark the weekly liquidity points. At this stage, we can already use Fibonacci extensions to confirm the weekly levels. I begin applying more force, narrowing the price ranges as much as possible. I am creating a dense network of points that price can interact with. From this point forward, Every interaction with one of these levels will have a clear interpretation. Using that interpretation, we can build more precise probabilities for where price is trying to go, and what the winding path toward that destination may look like. As you can see, the price is currently at the 1.786 Fibonacci extension. What does that mean? Geometrically, it means that the movement has not simply completed the original range, it has expanded significantly beyond it. We can see 1.786 as a point where the process has already transitioned from retracement to significant expansion. In terms of this process, the price didn't simply return to measure the structure, it used that structure as a foundation for expansion. So when price reaches 1.786, the more interesting mathematical question is no longer, will it reach the target? The question becomes, what happens to the relationship between the original range and the new range being created? From there, we can start looking for a new proportion. Does the movement stop? Does it contract? Does it create a new symmetry? Or does it generate another extension? But the most important thing is this. The block above is both weekly and monthly. The monthly candle closes in just 3 days, which means the race against the clock has begun. Will the block pull the price back within those 3 days? Will the 1.786 extension create a cooling-off phase in buying pressure? It's still uncertain. But the underlying evidence is beginning to create a probability of energy contraction before the continuation of the movement. The structure is now telling us that we may be approaching a point where the expansion begins to lose energy, at least temporarily, before the next phase of the movement reveals itself. Notice this. Do you see the wick that touched the 1.5 level with precision? This could be a sign of a failed oscillation. What that means is that the price created liquidity at that point that now requires a response. If the oscillation did not actually take place, then the liquidity at that level was not consumed, it was reinforced. Of course, this is not certain. But the probability that the liquidity at this point will eventually require a response is very high. This point could trigger a cascade, a kind of domino effect where leveraged long positions are forced to close, turning into selling pressure and potentially accelerating the move downward. It's essentially the same effect as an avalanche. One position triggers the next triggers another, and the process feeds on itself. And when you add selling pressure to the equation, the force can become exponential. Finally, I clean up the chart and leave only the points I am tracking. Now, all that remains is to wait for price to interact with one of them. And eventually, once the monthly candle closes, Bitcoin will decide on the resolution for the next monthly cycle. Every day, every hour, that passes before the monthly candle closes can help us understand where the probability of its close is becoming more likely. The price action setup is more or less complete. Now I need to map volume, time, trends, expansions, and contractions. There is still a lot of work to do. Bitcoin is, without a doubt, a beautiful chaotic system. Maybe, if I fall a little more in love with it, I'll start exploring some additional elements. One last thing that immediately catches my eye. There is a potential Cypher pattern that could develop here. I'm marking its ratios because, structurally, they represent points of force where, according to the geometry of the Cypher pattern, price can be drawn toward. 1.272, 1.236, 0.638. Together, they create a triangle of force. And triangles in price charts often represent a form of contraction, a compression of the price structure before the next expansion. Notice the triangle pointing towards liquidity. Bottom line of the broader structure. 1. We have 1 month left to close the 3-month candle above the high, creating a 3-month bullish engulfing candle. 2. The monthly candle closes in 2 days. The question is whether it will close above or below the monthly blocks. If it closes between them, there is a higher probability of a new weekly range forming between the blocks' boundaries. 3. Here you can see the change of character on the 1-month time frame, which will close in 2 days. In short, the next 2 days will define the next month, and the next month will define the 3 months, or more, that follow.